Croda reported a pretty decent set of results for 2025, and the market liked what they heard on the earnings call. Overall sales up 4.4%, and that's 6.6% on a constant currency basis. Someone will explain to me what that is one of these days. Anyway, within the business segments, and I'll read them, consumer care sales are up 8%. Inside consumer care, you've got beauty actives up 6%, beauty care up 4%, flavors and fragrances, a big one, up 15%, and home care up 2%. Within life sciences, overall sales in life sciences up 8%. Pharma up 4%, crop protection up 14%, a big one, seed enhancement up 8%. Industrial specialties shrank by 2%. That's certainly a non-core business at Croda these days. 20% of those sales are to Cargill, to whom they sold a big chunk of that business a couple of years ago. Okay, let's dig into a little bit more detail. Here is the box score, and you can see sales are up. EBITDA is up, and they in fact expanded their EBITDA margin as just a little bit as a percentage of sales, but certainly in the right direction. Operating profit also, very importantly, grew as a percentage of sales. We're going to keep an eye on that one. Also, it sounds like volumes grew in 2025. So let's take a look at the bridge chart that they showed during the earnings call, and this shows a 2.2% volume increase effect on operating margins, which I take to mean volumes grew. Someone can correct me if that was not the case. But again, overall, decent for 2025, but they had a lot more to say. They're going after costs, and they talked a lot about this during the call. £100 million of recurring operating cost savings by 2028. That's the target of their transformation program. 2/3 of that's coming from the supply chain. Doesn't mean just purchased prices, but the entire supply chain. Talk a bit about that in a minute. And 1/3 from the organization, which means essentially headcount reduction. They've already started on that in 2025. Some of the other things they're doing as part of this program is reduction of SKUs. Apparently they have 100,000 SKUs at Croda today, and I think that's a lot, even for a specialty chemicals company. They're going to reduce that. They're also, along with that, going to increase minimum order quantities. They didn't say what from and what to. I'm sure it varies by region, but the point is that I think the increase in that MOQ will inevitably lead to some of those SKU reductions. Anyway, Croda operates as a whole 40 sites worldwide. 11 of those are what they refer to as shared facilities. That's facilities which service multiple business units. And these tend to be the larger volume type of plants that are doing things like alkoxylation and esterification. They, in fact, have 8 alkoxylation sites as part of that 11. And they have committed to halving that number. So consolidating from 8 alkoxylation sites to 4 as part of this program, and in fact by 2027. So to me that's a big move. They will close, and I think maybe already have closed their and outsourced to a third party their UK distribution center. They're centralizing procurement. Interesting, it doesn't sound like it's that centralized right now. Probably some juice there. They're reducing capex to what they call a normal level of about £108 million per year. No more big M&A going forward. They can do some stuff on pricing. They talk about AI, etc., etc. And the headcount reduction I think I mentioned. Looking forward, they see 3 to 6% organic sales growth in the company as a whole. That's concentrated, as you might expect, in consumer care and life sciences. The industrial specialties business essentially flat. And as I said, that's a non-core business. Most importantly, they're looking at a 20% plus operating margin by 2028. That's against 17.4% today. That's a big deal. With that type of operating margin, they're going to be seeing 25% plus EBITDA margins, which to me really restores Croda to its glory days, right? As a specialty chemicals company with high gross margins and high EBITDA margins. So let's see. We'll keep an eye on that. As usual, the Q&A section of the earnings call was pretty interesting. I learned that in 25, plant utilization overall was 93%, which I think is pretty good. They're shooting for 100%, and look, if there's even a few points available there to improve that utilization, that's got to be great for the aforementioned operating margin. So I wish them success in that. I think the closure of the 4 out of 8 alkoxylation sites will certainly help in that regard. The other thing that came out a lot is their direct selling approach, right? No distributors at Croda, and customer co-development and innovation, stressing that a lot just to stay ahead of the curve. Keep those margins up, super important. By the end of the call, it was clear that the market liked what they heard. Here's the stock chart going into and coming out of the call, pretty self-explanatory. So I hope you have found this useful, and thanks again, as always, for listening.